Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. I like talking about Australia's banks. As I've said before, I think they played a very important role during the pandemic recession, acting as a shock absorber for the economy. This was true pretty much right across the board, with banks reaching special arrangements for residential property, commercial property and business loans. But there's one aspect I want to look at in a bit more detail, and that's rural Australia. My guest today is Alexandra Gartmann, CEO of Rural Bank. Rural Bank is part of the Bendigo and Adelaide Bank Group, and as the name suggests, provides banking services across rural and regional Australia. The bank also releases an annual report on the value of farmland, showing a seventh consecutive year of growth. Alexandra, welcome to Fear and Greed.
Thank you very much, Sean.
So up front, how did your customers fare during the pandemic?
Well, look, agriculture for the most part really has been resilient to COVID-19. Food security became an issue much higher up in many people's agenda. And we know that the provision of food and fibre to millions of people in Australia and overseas is the core business of those involved in agriculture. And so while the broader economic recovery remains a little uncertain, the success of ag in 2020 and really into the first half of 21 demonstrates its underlying strength and the potential growth of this sector. So when I reflect on the total number of Rural Bank customers that accepted COVID assistance, it was only about 1.3% of our total customer base. And in fact, today, I think there's only 6 clients remaining on some form of assistance related to COVID.
That's great.
So, it has factored quite well.
So when you're talking about clients, who are the sorts of people we're talking about? Obviously farmers, but are we talking about grain growers, graziers, what sort of people?
Well, we actually will fund any commodity sector in Australian ag. So that goes from livestock to grains to horticulture and vegetable. We lend across the country to all of those commodities. But really, ag is the third largest borrowing industry in Australia with 9.2% of total lending.
Wow.
But our core focus is in 2 customer segments, and that is in the family farm and the family corporate business. So family farm is generally, they've got lending from about 300K to about $1 million. And in the family corporate, that's lending needs of about 1 to 50 mil. So we don't sort of consider agricultural businesses in the hobby farm space, and we don't really operate in that sort of corporate agri space.
So how many family farms and family corporates are there now? Obviously a lot fewer than there were, but what has been the trend over the last few years in terms of that sector?
Yeah, there's some great data that the ABS produces, and there's about 84,500 farm businesses across Australia. And you're right, that is trending down. So each year we see roughly 1% or so reduction in the number of farm businesses in Australia. What that then drives, and particularly when we talk later about farmland values, is that farms are getting bigger. And we know in pretty much any business, scale is really important. So farms are increasing the scale of their operations and also the scale of their connection through the value chain. So sometimes we don't see businesses just acquiring more land, but they will acquire more ownership through that value chain to try and retain some of the returns through the value chain. Interestingly, as we've seen farm businesses expanding, sometimes they're expanding not just in the neighbouring farm area, although they love to expand in contiguous patterns because then you can use your machinery really effectively or other assets on farm. But with climate change challenges, people are actually buying pockets of farmland in different agro-eco-zones so that when you might have challenging seasonal conditions in one area, one region, you might have your other patch of land in a different climate zone, and therefore it actually helps to counter the challenges and reduce production. And we certainly saw clients with large livestock properties in Western New South Wales acquiring farmland in Victoria so that they had a more secure second option for grazing or finishing in a different climate zone.
So much for farming being local.
Well, I think farmers are very connected to their local communities because, it's really hard to play tennis on your own.
Yep.
So local communities are really critical, but they are part of an industry that's really global. And so they're thinking about where are the opportunities across Australia and how can they maximise those opportunities. And sometimes things like infrastructure and transport can really challenge a business to operate efficiently. But they're very aware of how they operate in a global commodity space. And so global trade and geopolitical challenges will impact on their businesses, irrespective of if they are exporting directly or they're using various other suppliers domestically.
I always find farmers interesting. I mean, I grew up in Western New South Wales, and so if I'd go home and you'd talk to friends who are now running farms and that, it always amazed me just how in touch they were about what the Australian dollar was doing, what commodity prices were doing. I think they sit on their harvesters and listen to the ABC all day or something or other. But, it is such a business for these people. I'm sure they love it. And, I'm sure fencing isn't as bad as it sounds to me. But really, they're running a business. And
You're right, Sean.
the successful ones are really across these sorts of issues.
You're right, because I think when we look at particularly the scale of farm businesses these days and the complexity and a number of those external challenges like climate and trade that they're having to respond to, it's something you can't really control. They are very sophisticated businesses. So farm business managers are essentially CEOs of quite complex operations, and they're having to think about production, they're having to think about suppliers, they're having to think about finance and marketing. So when I talk about farm family corporates, it's businesses where they are starting to specialise and have either members of the family or other members as part of a leadership team in the farm business with deep specialisation to be able to navigate all of those different inputs and influences to a successful business.
Okay, so how are they going at the moment? We read a lot to say that beef prices are high and the rains came late last year, and certainly on the East Coast things are looking much better. Is that the case?
Certainly, I think we've come out of quite a challenging period in Australian agriculture. And as you just rightly pointed out, the eastern states were experiencing multiple years of dry conditions. And now that we've had a couple of years of really good seasonal rainfall, and the outlook is fairly kind, we've got great interest rate environment for investment into the industry. There are some really strong indicators that now is the time to really, pardon the pun, to make hay while the sun shines, because we know that in Australian agriculture, there is the inevitable cycle. So you'll have a couple of good years, you'll have a couple of ordinary years, and then you'll have a couple of really ordinary and challenging years. And so when it is good, Australian farmers are trying to maximise production, maximise profitability, and then invest in some financial and seasonal resilience so that when the tough years come, they've got enough capacity to draw upon other reserves. And that's often financial reserves. But I'd call out also, particularly over the last few years, the emotional and mental health reserves that people have to draw on when responding not only to drought, but if I think about the last 18 months, bushfires, floods, cyclones, COVID, and then recently and currently a mouse plague in New South Wales and southern parts of Queensland. So there are having to prepare for the future and think about what might impact their business is something that many farm businesses spend a lot of time thinking about and working with not only their banks, but other key consultants and advisors to their business.
So it must be difficult lending to that sort of organisation because it is so cyclical. So is Rural Bank as a lender think about things slightly differently to your parent group, Adelaide and Bendigo, for example?
Well, I think it's important if you're operating in Australian agriculture, it's taking that long-term view. So people will always have to eat and be clothed. And so the underlying demand for the commodities is strong, and particularly with population growth will continue. I think that length of outlook means that we have to have very deep and authentic relationships. For Rural Bank and our parent and the Bendigo and Adelaide Bank, our footprint is important. So I often think about agriculture or even communities recovering from natural disasters. The last thing you want is a fly-in, fly-out player in your business. And so it's important that we are embedded in rural and regional communities that are reliant upon Australian agriculture. And so that geographic location of our lenders is critical. Understanding the industry and the business, and so therefore really having a firm eye on those cycles is critical, as well as regular dialogue, because things can turn quickly. But importantly, the people that an agribusiness entity like Rural Bank employs, they have to know the industry that they're operating in. I think we also have to always stay abreast of industry issues and seasonal conditions, and we do that with some of our insights research and some of the publications that we put out. It's not just for an external audience, it's about making sure our own people really are thinking about what might come, what the trends are, what's the outlook. And then it's important, particularly, banks are supposed to be really good at risk management. So therefore modelling the what if scenarios and having really transparent conversations with our clients to talk about what could go wrong, what's the modelling telling us. And we did that back in 2016, when the milk price dropped,
Yep.
we'd actually just done some modelling about what would happen, which customers would be impacted, how would we respond as a bank, and how could our customers look at their financial well-being through that kind of challenge. Unfortunately, that scenario played out, but we were really well positioned to have shared some of those insights with clients. So there was a bit of a, you don't put a pilot into a plane and say, start flying. You do flight simulator work. And modelling of risks is a bit like flight simulator work, where you're testing potential scenarios and thinking about what would we do if this actually occurred.
Mm.
So that's really important for banks to be doing, but then having those conversations with clients so that we're all thinking about, worst case scenarios, but also when things are really good, what will we do with the profits and
Yep.
how do we invest back into the business and strengthening that resilience of the business.
Stay with me, Alexandra. We'll be back in a minute. My guest this morning is Alexandra Gartmann, CEO of Rural Bank. Now, one of the publications you put out is the annual Australian Farmland Values Report, and last year's efforts showed a 13% jump in prices. That's pretty good. And then there have also been some pretty big sales. There was one last year down in the Riverina area, I believe, in sort of Victoria, New South Wales, and Gina Reinhardt, I think, has got some land up for sale. Is it just the fact that the conditions are so good at the moment? Is that prompting the price increases, or is there more to it?
No, it's very much the conditions are there for increased volume of production. Commodity prices are pretty strong, and even in the outlook, a few of them might soften, but they are great if you look at the historical average. And historically low interest rates is giving absolute buying power. So those things really drive an interest for investment. I think the other thing is we've come off a period of time where during drought conditions, people hold on to land. You think, I'll actually sell when the property looks better. Things sell better when they're green as opposed to when they're brown. And people want to work through a tough period. And often in drought, you're not in a great space to be thinking about exiting often what is a multi-generational family business. So sales, transaction volumes are often tighter through that period. If I reflect on this year's Farmland Values Report, for the first time in 15 years, all Australian territories and states experienced growth in that median price per hectare. And that was led by Tasmania, which pushed further into really record growth territory of 25.3% growth in 2020, followed by WA, which had 19.3%, New South Wales at 15.6%, and Queensland 11.8%, South Australia 10.9%, and lastly, bringing up the rear, Victoria 6.9%. And those extraordinary increases were despite a 14.5% rise in transaction volumes. And as I said, that bounced back from 2019's historic lows because it was a pretty tough environment. So I think that highlights that, unlike other parts of the economy, COVID has not dented agricultural returns or confidence. And it's really great for those in the industry because, their asset values go up, their security when they're talking to lenders goes up. So, it puts them in a strong financial position. And for those wanting to get into the industry, if you're thinking now is a good time to get in, well, you're probably just a bit late. So
don't say that.
You'd have to pay more to get involved now, which for the investment community, come on in because the returns are there. The one area where there's probably a bit of a challenge is for younger farmers and new entrants who are wanting to get into farm production and farm ownership. It's a tough time to get in now. So there are generally great outlook, but does make it tough for some areas.
Are there enough farmers out there?
Look, as I said, there's 84,500 farm businesses. That number does decline each year. But I'd also highlight that, like many other parts of the economy, agriculture is changing. And so being a farmer is not just about being in the paddock. There are some really sophisticated, high-tech roles and opportunities in Australian ag. And it might not be necessarily as the owner of the farm business, but it'd be in a leadership role or in a service sector to the industry where you're bringing in, satellite technology for 2-centimetre guidance for tractors and sowing machines, or it might be in the tracking devices for livestock in remote pastoral zones. So there's really dynamic, high-tech opportunities to bring talent into Australian agriculture. And through the Millennium Drought, we saw a lot of a brain drain out of Australian agriculture. And I think it's really exciting now that when you look at agricultural courses at university, the numbers of entrants and enrolments is going up. So it is seen as a stronger, more dynamic, dare I say, a sexier industry to be in because it's profitable. It's really hungry for modern skills, really creative innovators to come in and help transform our industry and make sure we modernise it. Even though the number of farm businesses may decline, the scale of them, the sophistication of them is growing.
Great place to leave it. Alexandra, thanks for talking to Fear and Greed.
It was an absolute pleasure, Sean. Thank you.
That was Alexandra Gartmann, CEO of Rural Bank. This is a Fear and Greed daily interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.